Run up over the past few months, at least. Copper saw its biggest one-day drop on record last week after the Trump administration narrowed the focus of its tariff policy. Joining us now is Phil Streible. Thank you very much for being here with us, Phil. I guess I have to ask you, when we've seen at least some volatility, as we noted, that has been somewhat unexpected for copper, how should you look at this or play this if you're looking for it as a indicator of what's to come in the global economy?
Well, I look at it more like the great copper reset here.
Okay.
I mean, futures have really returned back to stability here after extreme volatility last week, which was driven really by the persistent buying ahead of the tariffs and created that supply squeeze. So the administration, that reversal on refined copper really alleviates the near-term supply worries and closes the arbitrage between COMEX and the LME. So now futures come back down to that balance of more traditional supply and demand. But there's some new factors here that have come about that are going to continue to drive, and I think, upward price momentum higher in copper. And really, while the above ground inventories are ample, it's the growing demand. China's ongoing modernization and industrialization continue to drive that copper consumption. You've got data centers with all the AI talk, massive expansion in data center construction. And those centers, they rely heavily on copper for power distribution, connectivity, and then finally electric vehicles. I mean, they require significantly more copper than any kind of traditional vehicle with the wiring, the batteries. And that's where I think that this copper demand, this story, it's been knocked down, but the reality is the floor is continuing to rise on copper consumption.
Do you have a target for where you think prices are headed? It sounds like all those factors you noted at least suggest you believe it's going higher from here and not maybe in the short term.
Yeah, we really believe that there's a lot of unplanned distribution or disruptions with the supply outages. And then also, we believe that, if you look at demand versus supply, it is outstripping it. So we think that prices could return back to the 520 area here. And the way we would play it is looking at buying any kind of dip back down to 435. $4 is going to be your line in the sand. That's where your stop loss would be. Risk about $875 on that mini and micro contract. And then you really want to target that 520 area, which would be about a $2,000 gain.
What would be your takeaway for investors if we do see sort of another drop like we did in response to an administration policy, which, again, are somewhat fluid and fast changing and hard to handle? And then how do we frame that up with the perspective of its role in the global economy?
So now I believe that the possibility of them putting a tariff back onto that imported refined copper could come back into the play. And that's where, if you look at analysts, they're putting about a 25% chance that the administration does put a 15% tariff back on. That's where we think the headwind and the knee-jerk reaction would be back to the upside in the markets here. I mean, global demand is just expected for copper the demand to double over the next decade here. And, another way to play it that we do like as well, if you're not going to have pure price play with the commodities, look at something like Freeport-McMoRan or a U.S.-based copper miner, and they've got some of the best margins in the industry. They also have a lot of gold as a byproduct. So that gets you that efficient exposure to gold and copper as well. And you can see gold prices rising nicely here over the last couple trading sessions.
Giving us some actionable insight. Thank you very much. Phil Streible, Chief Market Strategist at Blue Line Futures.